So buying a home is scary. And the fear of making a bad money decision, especially on home, well, that's totally rational. You see, there's really two camps of potential home buyers in the market today. You have one group who really can't afford to buy a home with today's rates and prices. But then you have the other group who can. They're just wondering, am I buying at the right time? Do I wait till rates come down? Am I buying at the top of the market? Is this a smart time to invest in homeownership? Well, first off, we all need to be careful of where we're getting our information from, because a lot of it, especially the media, it's not factual. In fact, it's intended to scare us. And then some of the fear can come from people who have good intentions, friends, family, people who maybe just had a bad experience themselves. Perhaps they bought a home in 2006, lost a little money, don't want you to make the same mistake. Maybe you experienced this season of life yourself. Look, for some of you, this absolutely is not the best time to pursue homeownership. But for some of you, this could be the best time. And it's precisely because of the fear that's in the market. You see, the smartest investors, what they understand is that fear itself can be used to their advantage. Here's what Warren Buffett says about that. Close the doors. Be fearful when others are greedy. Be greedy when others are fearful. See, there are investors who are taking advantage of this fearful climate to win in today's market. They're actually leveraging higher interest rates to obtain discounts to build wealth. Sound crazy? I assure you, it's not. I've broken it down today in some really easy to understand charts. I'm even going to show you a real life scenario on how somebody did this. Now, let's start by taking a look at what's been happening in the interest rate markets, where we are today, and where we may be going. So here's a chart that takes us back 18 months. Remember, over here on the right, these are not mortgage rates. This is the 10-year Treasury, and remember, mortgage rates will generally move in concert with how much this is going up or down. Now, in March 2022, interest rates were around 3.5%. Then they went on a steep climb throughout the spring and summer, peaking out at the end of October around 7.25%. Now, we actually saw home values drop slightly during this period of time as a result of higher interest rates and the fear that came with it. Now, going into November, we actually saw a drop in interest rates that led to about a 6-month run of a pretty stable interest rate market, right around the mid, even low sixes. In May this year, we saw the interest rate markets really start to climb again, and that was due to some really extraordinary headwinds that we've been facing. But inflation has been steadily coming down, and eventually the treasury markets, mortgage rates, they should follow suit. It's just really hard to predict when. Well, last year, when rates dropped, they dropped quick, and home buyers responded quick. During the winter season, you saw home sales pick up the most since June 2020. And the message back then was similar to what it is today. Just check out some of these clips from this time last year. This one from Fortune on October 25th, housing market is crashing. New York Times, housing market is worse than you think. Here comes CBS, bringing up 2008 again. Home values take the sharpest drop since the housing crisis. Fox News, housing recession will send home prices tumbling 20%. Guess what? Even CNN agrees. Oh, well, here we are. No crash. Since 1941, we only had one time where homes lost value of any significance. Right here from 2007 through 2011. And when that ended, we had 10 years of straight, healthy appreciation. This is the record of a world champion. Now, this chart really helps us understand the historical value of homeownership, and it's especially important to reference if you're concerned about the imminence of the next housing crash. That's just not how it works. Again, we've only had one in modern history. Now, this shows all the way up to 2022. Even last year, we gained 6% over the year as a whole. It was a good year. So how's housing doing this year? Well, This chart shows up-to-date readings on a month-over-month change in home prices, and this data does report on a little bit of a lag, but as you see, not only Case-Shiller, but the FHFA, CoreLogic, Black Knight, Zillow, all these indexes, if you see that percentage in yellow, it represents an all-time high in real estate value. You can see the 2023 pace that we are on, quite the opposite of a crash. And what's so interesting, this occurred in an environment of higher mortgage rates. So any slight decline you saw in prices at the end of 2022 and going into January right here, again, that was attributed to higher rates at that time, and again, the fear that came with it. It's also important to note that in the fourth quarter of the year, we almost always have some normal seasonality that can soften the market a bit. We're seeing that again this year. So we know there's fewer homes that are available. We understand supply, demand, affordability. Those are the real guiding dynamics that affect home value. Be reminded of why inventory is so tight. The large amount of homeowners who are locked into their 3% mortgage rates of yesteryear, and they're still unwilling to give them up. You have homes that are aging. You have new construction. It's happening. It's just not up to par with the increasing population, the new household formations. And I don't see this talked about anywhere in the news, but I can tell you the utility of housing has changed. The personal value is not the same as it used to be. Since 2020, our home isn't just a place to build wealth or to call our own. It, in many cases, is our office. It's our gym. In some cases, it's been our vacation. I just personally don't see home the same way that I used to. And I can tell you from serving so many families before and after the pandemic, I'm not the only one. There's a premium that people are willing to pay for the quality of life. And while this market is unaffordable for some, just remember, income has gone up significantly, and that is more than compensated the markets from an affordability perspective. It's why higher priced homes are still selling. And it is hard to win in a market when you have tight inventory, high demand, high income. If I'm a buyer, I welcome any opportunities, including higher interest rates that create a slowdown in buyer demand. You see, that's about the only thing that's going to push competition, that's going to get other buyers out of the market. As a buyer, I am not afraid of higher interest rates because what I know, getting a home, especially at a discount, is much more powerful than the mortgage rate. What I realize is that higher interest rates are not forever. I believe there will be a chance to restructure the mortgage financing in the future. But what I can't do, I can't go backwards on my home value. In fact, the home investment itself may be a permanent one. The mortgage, however, may be short-lived. Let's take a look at a real-life scenario and illustrate what could have happened if you bought a home in November 2022. How would you be faring today? Now, as we looked at before, interest rates in November 2022 peaked out around 7.25%. This family bought a home for $485,000 at that time. Now remember, timing is everything when it comes to managing your mortgage properly. You, your mortgage advisor, you need to actively manage your debt just like we did here, 6 months into the mortgage. In April, we took advantage of the improved rate markets to refinance this debt with a new mortgage at a rate of 6.25%. Now notice that the summer of 2023 looks incredibly similar to the summer of 2022. Rates went up a good bit, and so did home values, anywhere from 4 to 8%. The estimate of this home today is valued at $510,000. By the way, rates today are averaging in the upper sevens. So let's break down over just 1 year what the wealth impact looks like for this family. Again, in October 2022, they paid $485,000 and put 3% down on a conventional mortgage at an interest rate of 7.25%. In the first week of April, after 6 payments, they refinanced at a rate of 6.25% and lowered their monthly payment by $324. Thanks to the fear in the market, Not only did our buyer have less competition, they were able to negotiate a 2% discount, having the seller pay $9,700 of their closing cost. Home values rose approximately 5%. That home today is estimated around $25,000 higher. They're now 6 months into their mortgage, so at $324 a month, that's another couple $1,000 savings that they've realized. Now, we also have to back out the cost of the refinance, which was around $4,500. As you see, the net benefit in just a 1-year period to this family is nearly $32,000. Now, this next piece of info is not tax advice. Consult with your tax advisor if you have a mortgage, but do remember that real estate taxes and the interest you pay on a mortgage can be tax deductible. Just in 2023, this family's real estate taxes and mortgage interest is going to total roughly $39,000. At their 24% tax bracket, that could equal thousands of dollars of potential tax savings over what their current standard deduction is. And not to say higher rates are good, but the more interest you pay on a mortgage, just know the more you may be able to write off at tax time. In the first year, this family's also paid down almost $5,000 on their mortgage balance. With every payment, they're taking a further step towards debt freedom. They're building equity. They're building wealth. If you're considering home ownership, I encourage you, don't be scared. Close the doors. Weigh out the facts. Make the best decision you can for yourself and do it with the truth. You know, there was no crash coming last year, and short of any unforeseen event, there's no housing crash that we expect this year. Yes, buying a home is scary. None of us want to make a decision we'll regret, especially on an investment that's so important. But unlike any other investment, you know, you're going to live in this one. Buying a home isn't all about money. The reason you should wait to buy a home is you can't afford it. But what if you can? What are you waiting for? Remember, when interest rates go down, and we expect them to, buyer demand will go up. Home prices will follow suit. If you want to buy now, you should hope interest rates stay high. That's what the data shows us. And exactly what deal are you waiting on? You know, if you really want a deal, go back to last October when rates were still over 7% and the message was the same. You know, if you want a deal, go back to a scarier time. Buy a home in March 2012. If you got the money, buy a handful of homes then, because today you'd be a millionaire. If you want a deal you could literally pick about any time over the past 80 years, buy that home. You could even get a deal buying a home in 2006 at the worst time. If you bought that home today, do you know that you'd still be in the profit? Buying a home is always a deal. And any discount that you're going to see now is thanks to higher interest rates. That's the truth. And you know, I believe everyone deserves it. So if you felt today's message really impacted you, would you please share it? Thanks for your time. I hope this helped.